Stock and stock market. Let's take Jason and his business as an example. Jason owns a popular chicken rice restaurant and he wants to expand his business. He calculated the resources needed and figured that he would need a total of $100,000. But he only have $20,000. So how can he get that money without borrowing and accumulating interest? Raise the money with stocks. Stock represents a fraction of ownership in a company. These fractions of stock are referred to as shares. Every stock will have its own value and that value depends on the growth of the business. Jason will need to split the business into 5 equal shares and attract stock investors to buy the shares. So now Jason and the 4 investors will each own 20% of the chicken rice restaurant equally. In order for investors to buy, he will need to put the shares onto the stock market. The stock market is where thousands and hundreds of companies list their shares to raise money or capital from the public, such as people like you and me. Years later, if business is successfully expanded, the value will increase from $100,000 to $1 million, which means that the initial investment made by Jason and the investors will increase from $20,000 to $200,000. However, every investment comes with its own risk. Educating yourselves and researching before going into investment is very important. At CyberQuote, we provide a broad range of financial courses depending on your needs. Most of the course are IBF accredited up to 90%. For more information, visit us at cyberquote.com/sg, or you may contact us at support@cyberquote.com.sg. Thank you for watching. See you soon.